Dheeraj Sachdev, Vice President and Head of Equities with HSBC AMC. Dheeraj, good to have you back on ET Now. Thank you for joining us. What do you make of Friday's monster rally? Is it safe to assume that Indian markets have a durable trading bottom in place?
Yeah, good morning, Nikunja. Well, at the margin, we are obviously incrementally getting positive because of the fact that the key macro variables which have been hurting, which includes high commodity prices and gold, are obviously showing early signs of reversal, and that is a big relief for the current account deficit. Though at the margin, the rupee depreciation is playing some kind of a spoil sport, but we believe the gold correction is more structural, and that should help the current account deficit issues. The second is, I think we do hope that the government will take series of measures like they did on Friday in terms of raising the gas prices, though it is largely from financial year 15 onwards. But the fact is that whatever they have to do, they have to do it now before the election campaigning and populism kicks in. So we do expect and hope that over the next few months they will take some measures on the reform side, eliminate bottlenecks, and kick off the investment cycle which have been hurt by regulatory or hurdles otherwise. And third is that we believe that most of the retail investors in the last few years have gone in for other asset classes, be it gold, be it real estate, etc. And if real estate is showing signs of fatigue, especially in the key metro cities, as well as gold seeing some kind of a reversal, you might expect that equity as an asset class will come back to the fore, which has really underperformed over the last many years vis-a-vis property and gold. So yes, going forward, we are hopeful in terms of risk-reward situation.
Dheeraj, whereas the big picture argument for equities is certainly constructive because gold has been whacked and there is very, very little case to buy into fixed income products. But at a time when globally things are slightly volatile, the Fed clearly has indicated that we could be staring at a tight liquidity argument. The fact that Indian markets are completely dependent on global dollars, is it too early to make a strong and a constructive case for Indian equities?
Well, we don't buy the argument on the over-analysis which is done on Fed statement in terms of restricting to the quantitative easing. So I think the risk on trade will be very much on. Yes, emerging market currencies have faced issues since 1st of May. There has been correction by almost 12 to 13% in many countries, including Indian market currency. And that has jittered some of the FIs who and some of them where the stop losses in currency have been triggered. But we believe that the flow into the emerging markets will structurally continue from the overseas investors, given the fact that there they are worried about issues on growth and avoiding any kind of recession, whereas emerging market growth is more structural in nature. So yes, there could be blips in between in terms of FIR flows, but we do believe it is more structural in nature. And at 59.60, there are many FIs who may come in to ensure that this is the bottom of the currency, and let us play the currency for 5-7% gain as well, if the current account deficit is showing some signs of improvement or reversal. So we do expect FI flows will not be disrupted meaningfully.
Dheeraj, hi, morning. What did you make of the gas price hike and as to how big a policy move this has been, and also how you're approaching the two contenders right now after the recent run-up in both these names, ONGC and Reliance?
Aisha, obviously this is a step in the right direction. These are some of the measures which were long pending from the government side, and I think the raising of gas prices will improve investment in more exploration and production. So some of the private companies and large companies were unclear about the policies and raising of gas prices, and it was not completely economically feasible for putting money or capital investment in exploration of gas fields. So obviously this gives them some incentive to increase production over a period of time, and it's a fairly decent and positive move.
Dheeraj, for markets to stabilize, ultimately earnings have to pick up. And given how rupee has moved for the quarter gone by and what's happened to commodity prices, is it too early to assume that that earnings have hit some kind of a bottom?
You're right, Nikunja. If you see the BSE 500 companies have declared close to just 6% earnings growth in the last financial year, and this has been one of the slowest in the last decade or so in terms of earnings growth. But if you believe that the commodity prices are correcting, and India being a net importer, and these commodities are input costs for many corporate sector in the manufacturing segment, then obviously it's kind of a relief for the margin expansion. And yes, going forward we would expect earnings growth could be better because of better input costs and eventually also lower interest rates.
Dheeraj, what have you made of, not just the collapse in gold prices, but also what it does to names like a Gitanjali, like a Titan, the likes of a PC Jewelers? Because this entire sector has really been getting hammered the last couple of days.
Yeah, I think the business model for these companies has somewhat been changing in the interim. If they were offering 60% loan to value for gold financing, and if gold price is correct by 20-30%, obviously they have to run for cover, and they have to ensure that especially the gold financing companies have to ensure that they maintain the margin of safety in terms of mark-to-market value of the gold which has been mortgaged to them. So obviously this year will be a difficult and challenging year for these gold financing companies, who in the last 3 years have been making a mullah in terms of higher gold prices, etc. So this time they have to really ensure that the asset quality is not fraught with risk. They get the recoveries for the fall in the mark-to-market value of the asset which has been mortgaged to them. So yes, we'll see that there will be challenges, though there could be trading bounce backs in few of these names, but not all of these names. On specifically gold exporting or diamond exporting companies, some of them had working capital issues of almost 5 to 6 months, and that is unexplainable. Consumer business, domestic local business, retail business generally have some of the companies are well placed in terms of negative working capital or low working capital, whereas some of the companies in the same sector had 5 to 6 months of working capital cycle, which is not explainable. So obviously the market doesn't like it, and such high working capital intensive businesses in a retail gold kind of business raises doubt or suspicion. So some of these companies are being hammered by the market.
Dheeraj, even though it's been a one-way ride for Indian rupee and dollar has strengthened considerably against the rupee, top-line pharma stocks are looking slightly rusty. Cipla has done nothing much in last 8-10 days. Sun Pharma also is looking slightly toppy. Do you think in the near term, pharma stocks are looking expensive and one is better off giving them a skip?
For long-term holders, obviously pharma is more sustainable story. But yes, in the last few months, given the market has become very polarized towards consumer and pharma businesses, Nikunj, they are at one end of the spectrum in terms of valuations, whereas other sectors, be it autos, banks, cement, engineering, etc., are on the other side of the spectrum in terms of valuations. So when the risk on trade happens, these high beta sectors tend to outperform the defensive segments like consumer and pharma, and that is what we are witnessing in the last few days. So yes, this kind of valuation gap is getting narrowed when the risk on trade happens, but one can't give away pharma given the fact that they have a very strong structural long-term story intact.
Okay, Dheeraj, good chatting with you. Appreciate you taking the time out and joining us.